Good afternoon. This is Brian Shannon with Alpha Trends Blogspot. Today is Monday, July 17th, 2006. The market's just closed here, so let's go ahead and start by taking a look at the Nasdaq 100 Trust here, which closed slightly higher today. We had a pretty dull session, actually. If we look at the intraday action, we can see here first on a 10-minute time frame that we saw sideways action. We're starting to see the moving averages crisscross a little bit in here. Longer-term moving average and the 5-day moving average are still heading lower. And when I say longer term moving average, obviously the 5-day moving average is longer term than this green one. That's just kind of the way I refer to them. And the red is the short term, blue is intermediate, green is the long term, and then I have the 5-day moving average on there kind of as a little bit of a bonus. But they're both still heading lower. We are seeing signs of a little bit of accumulation, but clearly the market's not ready to rally yet. Now, perhaps tomorrow we can get a move above these highs that we saw today, and that could spark a little bit of a rally, maybe up towards 37 or so. Tough to come up with a target here. This market is just so oversold, but I think initially the 5-day moving average is what we're going to look at, and we've got that declining trend line as well. We did see some relief from the oil market today, and we saw here that Friday actually made a lower high, and then we saw the lower low today, and profit takers came in and created a series of these lower highs and lower lows. So the oil market is down to the 5-day moving average, and that didn't really provide the relief that I would have hoped that it would have for the equities markets. Gold as well. Gold, and I've just pulled up the wrong symbol, but GLD, looking at the ETF for the gold. Gold dropped pretty significantly today, 20-something dollars or so, and that's not really providing any relief either. It was pulled back down to this rising 10-day moving average. Maybe it's going to see a test of the 50. We'll see. I'm not a gold or oil trader, but I do believe that they have impact on what we're doing here with equities right now. And I would have hoped that we could have seen a little bit more of a relief rally, but it failed to materialize in the Qs. The spider actually was a little bit worse, which was kind of a flip-flop because usually the S&P has been outperforming the Nasdaq a little bit, but it was down just a slight amount. So the spiders, though, did finish negative on the day, and looking at the 10-minute time frame here, we kind of see the same picture, just a real dull sideways day. No one's really making any big bets, it seems like right now. We are probably still in more of a stock pickers environment here and more of a day trading environment as well. I think that with all the news this week, we've got a ton of earnings coming out, hundreds of them. Tomorrow in particular is going to be very heavy. We've got these conflict in the Middle East going on. We've got the Federal Reserve chairman going to testify this week before Congress. So we've got a lot of potential catalyst out there, and it's you've got to just be in a risk averse mode right now, and to me that means trading very small share size, keeping your stops tight, and keeping most of your trades for day trades right now, in particular if there's earnings due out on the company that you're trading. So otherwise, I think that if you're going to be trading this market, you probably ought to look to options. That's the only way you can absolutely define your risk here and make some speculative plays in the options market. If you're wrong, you know exactly how much you're going to lose, and it can't get any worse. Let's go ahead and take a look at some of the stocks we've been looking at. AMGN, symbol AMGN, was a stock that we had been short for a couple days. The chart doesn't want to pull up here, but I had suggested a stop of 64.70. That stop did get hit today, and let's take a look at a 5-minute time frame. You can see it gapped lower, pretty significantly here. A lot of times when that happens, what I suggest is maybe taking part of your position off, then adhering to your original stop. So you should be stopped out of this with a pretty good gain here. We've been in it for a couple days now, and the stock has dropped a couple dollars. So it looked like a nice trade in that AMGN. The only other stock that we had really had open was CHK. This was Chesapeake Energy, and this is something we had been short. I had suggested a stop above Friday afternoon's highs of 29.60. That was right here. The stock gapped lower and continued down a little bit. Right now, I'd say probably this gap is where you ought to place your stop, about 29.34. So pretty close to break even, really, on that trade for CHK. But again, an energy company, it just looks like it's ready to fall off a cliff here. Speaking of the energy plays, the energy sector, the spider XLE had a really pulled in pretty hard today, although it's coming down to that 50-day moving average. Just something to keep your eye on. So we've got other stocks that we looked at for today, including ASTM, Astrum Biosciences. We were looking for a move above these recent highs at 149. We were looking to buy it at 150. That strength never materialized, so I'm going to take that one off the list as there was no entry there. No reason to be involved, and it looks like it's breaking back down. CyberSource, symbol CYBS. We'd also been looking for a little bit of strength here, looking for it to get above $11.20. That never occurred, and I'm not sure if I'm going to update this one later or not, but for now I'm just going to say let's scratch that one off the list. And SNWL, SNWL. This stock, we had seen the big volume on Friday, and the stock kind of traded sideways. And then what I was suggesting in here was that we wanted to see the stock move above $9.15. Well, today's high was actually $9.13, so there was no entry for SNWL as well. So none of those longs should have cost you any money. There was no, our entry parameters didn't get hit on any of them. This stock is still making these lower highs, although it's just started to show some higher lows. So perhaps we'll look at that one again for a entry maybe tomorrow or the next day. As far as the new shorts we looked at yesterday, I was looking at MGP Ingredients, symbol MGPI. This is the ethanol play. And I had suggested in here that we sell the stock short between $22.60 to $22.70. You had that opportunity in here this morning to get short this stock. So there's plenty of time to get short. The initial stop that I'd suggested was 23.32, which was up above this level here. And then the stock has started to break down a bit. And right now I would say that basically your stop probably ought to go about break even at this point. If you want to be real aggressive above this high, but this high is 22.50, so might as well give it another dime, 15 cents, and give it an opportunity to work a little bit here because it's a break-even stop at this point. So that's what I suggest with that. MyoGen, symbol MYOG. MyoGen, I had suggested in here a move below $26.75. So initially we had that. We had a move. I'm sorry, we didn't have that move initially. Let's go to a 2-minute time frame. The stock opened actually at about 26.85, and then it broke down below that 26.75 level right in here. Now, if you had gotten short, and I don't typically like to get short after it's dropped as hard as this, but this is what I said, so I'm going to continue to update this position as though I were in it, although I'm not. And I would say that at this point, our initial stop was $27.25, and that would make us actually stopped out of this trade. So it got stopped out at the end of the day. I didn't realize that in my notes, but this one should have been stopped out for a loss of about 50 cents on MYOG. XTO, this is the stock chart that wouldn't pull up yesterday for us, and we wouldn't have had an entry in it anyway. I only want to bring it up because it's an energy play, XTO Energy, and it really followed that XLE. But the other last stock that we looked at was Omnicare, symbol OCR. And this one I had suggested selling it short below $46.70. Now it did that right here on the open, but as I always say, you don't want to sell short that initial strength. You don't want to sell it short on a gap lower, just like you wouldn't buy a stock that gaps higher. So then it continued to rally up, and it went beyond where we would have liked to have put our stop originally above this Friday afternoon high. So you should not have played OCR. But I think that we probably will have an opportunity to get short this one at some time in the future. This weekly chart continues to look terrible, but right now it looks like we're a little bit early, but it shouldn't have cost you anything. So we'll have to revisit it. Again, the market remains risky. I'm going to continue to state that theme as I have been over the last couple months. And thanks again for visiting my blog here at Alpha Trends. I will be back this evening with another video that has some ideas for tomorrow. Thank you.